is Technically Legal, a podcast about legal technology, innovation in the legal industry, and the impact tech has having on the law. I'm Chad Main, the founder of legal services company Percipient, and on today's show, I talk to Lucas Moskowitz, Robinhood's general counsel. We talk about the democratization of investing and the need for a data-driven approach to the regulation of the finance industry. Today's guest is Lucas Moskowitz, who serves as general counsel for financial services company Robinhood. I bet most of you out there have heard of Robinhood, and I also bet a bunch of you already invest on the platform. The company was launched in 2013, and its stated mission is to democratize finance for all. They try to do that by making it easy for investors to start investing with just a few bucks in their pocket rather than having to be a high roller. Key to this effort is the fact that Robinhood offers commission-free trading and also provides access to cryptocurrencies. As you'll also hear, education is really important to Robinhood, and there's a ton of educational content on the website to help new and experienced investors alike. Lucas has had a pretty interesting career path. Instead of taking a judicial clerkship right out of law school, he started first in big law with WilmerHale, but then he figured out that a federal clerkship with the Southern District of New York might provide him with experience that he wasn't going to get at a law firm. After the clerkship, Lucas went to work for the SEC as an investigator. Then he took a walk up Capitol Hill and started working for the Senate Banking Committee. After a couple of years in Congress, Lucas went back to WilmerHale, but then the SEC came calling again. That's when he landed a gig as chief of staff for then SEC Commissioner Jay Clayton. All of this made him uniquely well-suited to join the Robinhood legal department when they came calling in 2020. Lucas and I talk about how the company is breaking down barriers in investing, and we also discuss regulation of the finance industry and the need for a balanced, data-driven approach. Also, as you know I like to do, we talk about the potential of crypto and blockchain technology and the importance of educating legal professionals about these innovations.
So, law school at Georgetown, right?
Correct.
And then did I see right? You clerked with WilmerHale too?
I started my law career after Georgetown as a junior associate at Wilmer.
Oh, so you didn't clerk. I thought you clerked. So junior associate.
I did. I did about almost 2 years at Wilmer, I think, as a junior associate in the securities department. And then I clerked in Manhattan for a district judge in the Southern District for about 2 years.
I was getting that confused. But what's interesting about your background, though, is, okay, so you go to WilmerHale, you're junior associate, but you're not there very long before you go to the SEC.
That's right. So
what about that opportunity made you want to jump ship from private practice to a government agency? Obviously, the salary was probably less. It's a little different what you're doing. What was it that motivated you to do that?
Yeah, you definitely don't go to the government for a salary.
Yeah.
And I certainly didn't. I had the opportunity, fortunately, to do a bunch of really fun things in and out of government during my career. And, I started at Wilmer with every intention of staying there and, trying to become a partner. And I really enjoyed it. And it just so happened that I got put on a big securities investigation at the time. And after that wound down, I said to myself, well, a lot of people seem to go do clerkships here. I didn't do that out of law school right away. And so I decided, why don't I give that a shot? I'll, learn to become a better writer. I'll see the inside of a courtroom. I had, aspirations before I joined Wilmer of being a trial lawyer or an appellate lawyer. And so I thought that would be a fun thing to do and kind of a good learning experience. And it was on all counts. And that's kind of why I spent 2 years at Wilmer kind of seeing what it was like to be at a law firm, then wanted to see what it was like to be in the inside of a courtroom. And then I actually went back to Wilmer for a really brief period of time as a senior associate after I left my clerkship. And it just so happened that this was during almost the aftermath of the financial crisis. And the SEC had a hiring freeze for a period of time, if I remember correctly.
You go to the SEC in the 2010, right after.
So I had about 6 months back at Wilmer, maybe a little bit longer, before I went to the SEC. And that was an application I had submitted almost a year before that. So I'd gone back to Wilmer thinking, okay, nothing's ever going to happen with the SEC. Either I'm not going to get an interview or the hiring freeze will keep going. And then it lifted. And I went and interviewed there and got a job as an enforcement lawyer in the enforcement division at the SEC. And, of course, that was always something I wanted to do after I'd worked on those, that enforcement case when I was at Wilmer. And so I jumped at the opportunity to do that, which, kind of touched off a series of government jobs, after my clerkship.
So were you getting to the courtroom a lot in that position, or are you kind of behind the scenes because you're new there? Or what was the progression?
Yeah, no courtroom there. I was an enforcement lawyer, so an investigator, really. Right. And so the SEC has investigators and it has trial lawyers. And, sometimes the investigators will help on a trial, but it's really the trial team that takes those cases over once the investigation is complete. The commission brings charges, and in those cases, right, the respondent is not going to settle. And so I did not see the inside of a courtroom at the SEC, but I had a lot of fun doing what we were doing at the time, which was basically bank investigations post the crisis. We were looking at specifically community banks, mid-sized banks, and looking at how they were treating their commercial loans and their loan loss reserves, because that was obviously a period of time where real estate values were plummeting, and you were looking at how are they accounting for those loans, and of course discovered in some situations that the banks weren't properly accounting for them.
So then after the SEC, you go up to Capitol Hill.
That's right. So I actually went and worked for a commissioner, Dan Gallagher, who's now my boss here, CLO at Robinhood. I had met Dan at Wilmer. He came back as a partner, and I was a senior associate before I went to the SEC. And then I went to the enforcement division, and he became a commissioner. So after I worked in the enforcement division for about 2 years, I worked for Dan as one of his counsels for a little bit less than a year. And when that was ending, kind of thinking, do I want to go back to be an enforcement lawyer? Do I want to go do something different? And there was an opportunity to go be a detailee from the SEC over to the House Financial Services Committee.
What's that mean, detailee?
You're still an SEC employee. They pay you, but you go get detailed over to the committee to work on, policy matters for the committee. So I did that for a year and then stayed on. So I left the SEC after that year and became a full-time staffer on the Financial Services Committee.
At the U.S. House? Then you jumped to Senate.
Then I jumped to the Senate for a year. So Richard Shelby was the chair at the time. I think he had one more year of eligibility to be the chair of the Banking Committee. And he reconstituted a small group of investigative lawyers that I believe had been a component of the Banking Committee, several decades back, and kind of had, gone out of style, and they didn't have it for a while. And he reconstituted a small team. There were 3 of us. We did various sorts of investigations. Oddly enough, the biggest one we did was on the flood insurance program post Hurricane Sandy, because there were a lot of claims or complaints that the insurers weren't paying out on those claims. And so we took a really close look at that. We produced a report. We testified before the committee. So very, very interesting experience. That was my first time ever sitting before a congressional committee. And now I guess that was my one and only. Hopefully I don't have to be there too often, but it was a very interesting project. And then of course we did other investigations after that, but it was only a year because again, he was timed out and a new chair took over.
What is the difference, if any, I assume there is, between working for an agency and then working on the Hill, the legislative branch?
I've done a few different things at the SEC, and those were different jobs. Certainly, being an enforcement lawyer, being a counsel to commissioner, and then being chief of staff. I think the enforcement lawyer position and to some extent being a counsel for Commissioner Gallagher were very legal jobs. More policy involved in working for a commissioner, and certainly a lot of that working for the chair, but much more legal. When you go over to the Hill, you're really focused on the policy. You're focused on policy in terms of oversight. You're focused on the policy in terms of getting legislation done. And so there are, obviously legal aspects of that job, but you're very much at that point more a policy person than you are what I would say a kind of a core lawyer.
So you've already alluded to it. You do a stint back in the private sector, and then you come back as chief of staff to Jay Clayton back at the SEC. So you're one of the higher ups. Did you want to go back? Were you asked to come back? I mean, you obviously like working there. So how did that happen that you ended up again at the SEC?
Yeah, I mean, a few reasons I went back. I mean, obviously I have a lot of affinity for the SEC. Obviously, I think it's a very important agency. I think it's one of, the more impressive agencies in terms of the scope that it covers and the talent that the SEC brings to bear on the different responsibilities and areas it covers. I had the good luck of meeting Jay Clayton through Dan when we were doing some consulting work for Paul Atkins, who was also a former commissioner at the SEC. He has his own consulting firm here in DC, and we joined him for about a year and met Jay during that period of time. And it just so happened that Jay became the chair. And, we had obviously been talking about various regulatory and policy issues over the course of that year. And so asked me to come on board and be his chief of staff, which, obviously for me, a no-brainer. That's all of the different parts of my career that I love doing the most. It was the legal, it was the policy, it was management, it was ledge affairs in some respects. So lots of different things went into that. That was, something that there was no way I could pass that one up. And obviously just getting the chance to work with Jay was, certainly a highlight for me and something that I wasn't gonna miss out on.
Right. And so this gets us up to around 2019. There's a change in the guard. You go back to WilmerHale for a little bit, but then you end up at Robinhood, where you are now. How did that come about? Were you working on a project with Robinhood at the firm, or how do you join the ranks there?
Yes, this is my career in a nutshell, right? I go and do something that I think I'm going to stay at for a while, and then something else comes up. I wasn't searching for anything. I was happy at Wilmer. I was became a partner, which, these days not easy to do at a firm that I'd worked at, a couple of times in the past, and was really very excited about being there for the long term. And again, kind of my career is very tied in with Dan Gallagher. And so he was on the board of Robinhood at the time. And he, in 2020, I think they had asked him to step off the board and become chief legal officer. I think the general counsel at the time was thinking about leaving, and they had just gone through a major series of platform outages in March of 2020, I believe. And so they asked Dan to come be the CLO. And when he decided to do it, he called me up and said, "Hey, I know you just got back to Wilmer, but I'm going to go do this. And there's an exciting opportunity to come over here, be a deputy general counsel. We need to form a government affairs team." Robinhood didn't really have a full government affairs team at the time. And so, again, really interesting kind of set of responsibilities for a company that had a mission that resonated with me coming out of the SEC.
What about that mission? I was just about to ask you, because you just said you have a lot of respect. Obviously, it makes sense for the SEC, but you're in a different role now. You're on the other side of the table. But what about Robinhood were you interested in that drew you into this position?
When I was with the SEC, and particularly when I was working with Jay Clayton, we talked all the time about what's in the best interests of the Main Street investor, the retail investor. And that's kind of how we, guided our decision making at the SEC. And so when I went back to Wilmer and the Robinhood opportunity came up, the mission, in my view, is very similar, right? So Robinhood is out there to open up access to capital markets for retail investors. Obviously, our business is expanding into other areas as well. But the whole idea here is, how do we get more retail investors into the market? How do we keep them here for the long term? How do we break down legacy barriers, whether they're financial or emotional, educational, all of those kinds of things, right? That's a very much, in my mind, a very consistent mission with what, in large part, the SEC is trying to do, which is, again, they have a broad remit, right? It's fair and efficient markets, capital formation, investor protection. But part of that is, the more retail investors are in the market, the better off they're going to be long term, and the better off our country is long term. And so there was a lot of alignment for me between those two missions.
Explain that. The more retail investors you have, the better off everybody else is.
Yeah, look, I think it's what makes our markets in the U.S. the envy of the world, right? I mean, we have the deepest, most liquid capital markets, and a large reason for that is we have higher retail investor participation than any other country in the world. That's not the only reason why our markets are viewed that way, but it's a big reason, right? We have a higher levels of participation for retail, and certainly those numbers have been going up over the last several years, in large part because of the changes Robinhood brought about through its business model. And so my view is, and I think a lot of folks would share this, is that if you have more and more retail investors participating and they stay in the market for the long term, their money is likely going to grow, right? The stock market has been one of history's greatest creators of wealth. And so the more people participating in that system, the better off they're going to do. And then as a result, I think the more liquid and more efficient our markets are going to be.
Getting ready for today, I listened to another podcast you were on, and at the time, I don't think it was that long ago, but I think you said, or maybe it was the host said, roughly there was around that time 20 million customers of Robinhood. What's the makeup now? What's the company look like on the customer end?
I think we have closer to 24 million now, and those customers continue to be, I think, a little bit different than your incumbent firm, right? You're talking about customers who are generally a bit younger. Our median age is in the 32, 33 range, I think. Those customers are investing with smaller amounts. So you look at a legacy firm where the average account size is maybe $250,000 or something like that, much bigger accounts. At Robinhood, it's much lower. The average account size for us is probably $4,000 or $5,000. And so you have people who are younger, who have smaller account sizes. Our surveys show they're more diverse than incumbent firms coming into the market, starting their journey. About half of our customers are first-time investors. And so it's really a different customer base. A lot of them are starting this journey for the first time. Now, there are some memes out there, right, that our customers are, day trading and they're wild at taking risks and all that kind of stuff. And I think for the most part, those memes are incorrect. I think the vast majority of our customers show more buy and hold behaviors, and they have stuck around, right? There was a big thread after, the pandemic and GameStop that all of these folks were going to exit the market, and they haven't. And I think that's a really good thing, right? If we keep folks in the market investing for the long term, I think the better off they're going to be.
You said the makeup of the Robinhood customer is a little smaller than other maybe TradFi, as they say, traditional financial companies. But you guys are rolling out new products, looking for different stuff. And I think one of them is Robinhood Gold. That caters to a different type of investor, correct?
Yeah, Robinhood Gold's the subscription offering. I think it's about $5 a month now. It gives you access to certain things you don't get without it in terms of, more market data, things like that. And so I think Robinhood Gold is likely going to be a significant feature for us as we expand the business more generally. I mean, a good example is the credit card, where we're giving customers 3% back across the board. You need to be a Gold member to get that card. And so you can see kind of, the importance of that product. But it's one of many different products we have, across the suite of equities, options, crypto, and now the credit card money business.
When we come back, Lucas tells us a little bit about the inner workings of the Robinhood legal department. He also tells us why the financial industry is best served when it is regulated with a data-driven approach. And we also discuss the importance of educating legal professionals about emerging technologies. I'm Chad Main, and you're listening to Technically Legal.
We need to do more with less. That is the key takeaway nowadays from almost every survey of in-house counsel. But what if it didn't have to be that way? What if you actually could do more for less? By combining legal expertise and technology, Percipient enables legal teams to get more work done for less. Buried in contracts and sales is frustrated with turnaround time? We can help with that. Did you just get hit with a subpoena and reviewing 100,000 documents and files will tax your resources or cost you a small fortune in billable hours? We can help there too. Our team of legal professionals leverage tech and project management principles with the right amount of human oversight to deliver precise, efficient, and cost-effective legal solutions. Whether it's legal operations and contract management support, subpoena compliance, or document review, Percipient is your partner in really doing more for less. Percipient. Legal services powered by technology.
Let's get back to the legal department, because this is a legal tech podcast. You mentioned GameStop, so that obviously puts some wheels in motion. Well, they're already probably in motion, but let's say expedited, the legal department there. When you joined, how many people were in the legal and compliance departments? How many are there now?
Yeah, it certainly, expedited is probably a good term for that short period of time we went through there. I don't know if I could tell you off the top of my head how many lawyers we had at the time. I think, generally speaking, when Dan got here and I joined, we made some changes to the department. We restructured a bit. And I think over the last 4 years since that happened, we've been rather consistent with the size and structure of our group. And so I think now we're around 35 to 40 lawyers, give or take, as we're, always hiring a bit here and there. I mean, we have in total closer to 60, 65 folks in the department. So legal professionals, and then you would say lawyers, right, versus legal professionals. And so fairly big department. I don't think it, again, looked that much different pre-GameStop as opposed to post-GameStop. I think what GameStop did, obviously, and certain other things we experienced as a company, is it really helped us mature very fast. You never want to go through those things, but obviously you come out of those types of experience, I think, a stronger department, because you've lived through that. You've learned lessons, right? You've been through those trials. That always, I think, helps, and it, requires you to do it real fast when you go through a crisis.
Right. You guys are obviously a tech company. Legal department wise, is there anything tech wise you guys implemented to try to help with this growing process, or are you doing anything different than you were before?
I think since I've been here, we've always been trying to figure out how do we use technology to be a more effective and efficient legal team. I think that's not limited to legal. I think company-wide, we're always trying to do this because, as you said, we think we provide the best technology out there to the market, to investors. And of course, we want to have it internally in our own jobs. I think obviously now it's really focused around how do we use AI going forward. I think everyone's thinking about that. And certainly we're not rushing to implement AI for the sake of implementing it, but I think we're taking a really close look and trying to bring on technologies. It's a force multiplier for our team, and it allows us to, I think, work more efficiently. We're doing that in several areas, right? We're looking at how do we bring on technology to help in legal research, in data analysis, e-discovery, our own internal knowledge management systems, things like that. So we're looking at it very broadly across teams and trying to figure out what are the best technology solutions for us, given that we're trying not to, simply grow from a employee standpoint. We're trying to, how do we, multiply our force share through technology?
You're there to service the employees. You're the counsel, their first line of defense, or the counselors there. But so let's get back to the customers, though. Robinhood's goal is to democratize finance for all. What does that mean to you? We've already talked about that the customer's a little different. They're Main Street investors versus the Wall Street investors. But what's kind of the company's mantra? Like, what are they doing to make it more democratic so the average Joe does have access to something they didn't have before?
Yeah, to me, it's really about what I mentioned before in terms of you're breaking down these legacy barriers that have existed in our financial system for decades. And a big part of that's economic barriers. Just taking the commission-free, no account minimum model, that helped bring millions of people into the market who otherwise probably couldn't have afforded it. And if you think about it, if you have, $50 or $100 to start investing, and you've got to pay a $10 commission and have an account minimum of whatever, $1,000, you're out. So that innovation alone, I think, has been transformative, and it's really kind of led to this revolution in retail investing over the last several years. But it's not just limited to the economic barriers. You think about the emotional barriers, right? If you're forced to go in and to a branch office of a broker and speak to a human being when you've never done that before, that might be a little bit intimidating, and you may not even have access to do that, right? If you're in a very rural area or in an inner city, you may not have access. Even if you're doing it on a kind of, the old stodgy websites of brokerage, right? In the, let's say the, 90s and early 2000s. Robinhood broke that down with the user interface, right? And the ability to do it on your mobile phone wherever you were. And now it's even expanding further into 24/7. You don't, if you've got a busy day job and you can only invest and trade at night, expanding those hours is very helpful for people. And then I think educationally as well, right?
Tell us a little bit about that. You guys work hard to educate the investors, kind of counteract some risk.
Yeah, it's a big part of what we're trying to do here, which is to say we have over 23 million customers on the platform, and they're primarily self-directed, meaning that they're making their own investment and trading decisions. We don't stand in the middle of them, and we don't typically give them advice. We do have a product that does provide an investment recommendation. We aim to have that be Reg BI compliant, but for the most part, people are making their own choices. And so it's incumbent upon us to do what we can to help inform those customers the best we can through various forms of education. So you think about the Robinhood Learn website that's available actually to customers and non-customers. And it's got, a ton of different articles about everything you could think of in the capital markets in a way that, we think is more digestible for, somebody who may not have decades of experience as an investor. The Snacks newsletter is a really good resource, gives you that financial news, but in a really, I think, more relatable way for a younger population, for a first-time, investor population. And then, of course, we have things built into the app at various different points in the app. You'll receive some ability to access, educational material or to read more about certain things, right? Whether that's a different ETF product or if you want to get into options trading, that is available through certain points in the app.
Well, let's use that as a segue to the role of regulation, because you just said something here that, number one, your goal is you want to get more people involved, more people in the markets. But then you also said that for the most part, they're making their own decisions. We want to educate them so they're making the best decisions they can. But let's talk about, obviously the SEC has changed a little bit since you were there. They would say, well, we're here to really protect investors, and maybe they may not have the education needed. They maybe need more protection. I guess I got a twofold question here. How has it changed in your mind since you were there, since you saw back in the day underneath the hood? And then how should regulation fit in if the goal is to bring more people into the fold, more investors?
Again, I've had the benefit of seeing this from a few different angles. I've done it on the defense side for companies that were facing SEC investigations. I've prosecuted those cases as an SEC enforcement lawyer. I obviously clerked and saw that side of it. And then I've spent a good bit of time on the regulatory and policy work as well. For me, you have to strike the right balance here. Because I come from a regulatory background, I'm of course a believer in strong regulation. You absolutely need that. You absolutely need robust investor protections in place. Our country, our economic system is so impressive because we have, and so good for the country because we have strong regulations in place, right? But you also need to temper that, right? If the pendulum swings too far towards that, what I would say, investor protection, or some would say nanny state mentality, that makes it more difficult for people to invest. It makes it more difficult for companies to raise capital. It degrades the efficiency of the markets, right? So you have to strike the right balance here. And part of that is making sure that investors have opportunity and access, ensuring that companies can access the capital markets as well to provide those investment opportunities, right? And making sure that once folks are in, there are guide rails in place, there are clear rules in place that are providing the right protection. At the end of the day, we have to recognize that there is a little bit of a push and pull here, right? The markets inherently involve risk. And so we have to allow that risk in some sense, but we also have to make sure that the risk does not, it does not become excessive, right? And that's where you have the right rules in place.
For the last few years, I think some would argue, well, the SEC's done, regulation by enforcement. So obviously that's one extreme. So we got to strike a balance here. What is that balance? Rather than just going all out and fighting it out in the courts or even before it gets to courts, how can regulators work with financial companies like Robinhood to strike this balance where you're providing access yet still protecting?
For me, it comes down to having a data-driven approach. We have a tendency as a regulatory community to rush into certain policy solutions after big market events or crises, right? You can see that throughout the years, whether it was Enron, financial crisis, now GameStop, right? There was a immediate reaction, I think, pushing the pendulum very much towards we need more rules, more regulations, more investor protections, right? Some of that's justified. Some of it may not be, right? And oftentimes when we react quickly, we're reacting quickly based on certain political or policy judgments that may not be consistent with the evidence on the ground. And so for me, it's really important, having been at a regulatory agency, to really try to collect data to understand, is there a market problem? How do we address that market problem? And is our proposed solution going to create unintended consequences? If so, can we try to figure out what those are before the rule goes into place and address them, right? And then again, the balance, right? We don't want to overregulate. We don't want to underregulate. Look, I think I have a lot of respect for the SEC as an institution. I have a lot of respect for the SEC staff. I disagree with the approach in many cases that's been taken over the last several years under the current chair. I think it's deviated from the data-driven approach where you really study a problem and understand it more towards the kind of the more political type of policy solutions that they're looking at. Perhaps the best way that I can, kind of to talk about this is look at regulation best interest, right? We've had a debate in this country for many years about what the proper standard is for brokers versus investment advisors, and in terms of the duties they owe to their customers when they provide investment recommendations or investment advice. And that was an issue that was talked about and studied for many, many years. And it culminated finally in regulation best interest when I was at the commission. And I kind of compare that to what happened more recently with respect to the SEC's predictive data analytics rule proposal that seemed to kind of in a way come out of nowhere. The rationale changed over time. There wasn't a ton of study that went into it. Didn't seem like there was a lot of data collected in order to kind of justify the rule proposal and to prove out the potential market problem. As a result, I think you see from that comment file, folks were very, very negative about the proposed policy solution there. And I think the SEC rightly so recognized that and decided that if they're going to go forward, they need to repropose it.
I'm not going to defend the SEC. I agree with you. The track they've been on for the last few years is not beneficial to really anyone. But I have a question, though. Technology, especially over the last 10 years, has been moving fast, very fast. So just to play devil's advocate, what are the SEC's options if you don't know where this technology is going to go? And, it got to move fast. The companies are. The tech is moving fast. So what do you do as a regulatory agency?
Certainly a challenge. Even with respect to AI, the debate has shifted, over the course of just a few months. And, the technology, of course, is rapidly developing. So I wouldn't sit here and say that that's not a challenge for regulators. It is. It always has been a challenge for the government to keep up with the private sector and development of technology. And sometimes the government has done a better job at it than at other times. But I would say, to your point, because it's changing so rapidly, because we don't know exactly where this is going to end up, that's why we really need to be spending the time right now to study it. We need to be talking to industry. We need to be studying the technologies that are coming out. We need to be studying how firms are using them or are going to use them, rather than rushing with a rule that, in my opinion, may be so broad that it would actually kill technological development and result in less access to the markets as a result of, stifling technology. And so that's the key for me. Yes, it's moving fast. Yes, the government has to keep up, but the government has to do its part before it rushes to regulate, to really understand the technology and how it's being used and how customers are using it.
Stifling technology moving fast, kind of with that theme is, where does crypto and blockchain technology fit in to Robinhood's plan? I mean, you guys are 10 years old now. Like, where does that fit in, not only to Robinhood, but just in general, where do you see it fitting into financial markets?
Yeah, well, crypto is an important part of our business. It's a product that customers have clearly told us and many others generally that they want access.
I should point out too that those you just acquired Bitstamp not too long ago. So that's obviously you believe in where it's going.
Yeah, again, important product for us and something that our customers have clearly expressed that they want. And there are many different paths for this technology to continue to develop. Obviously there's blockchain technology, there's crypto, there's, tokenization. There are many areas where I think we see a lot of opportunity, both as a business, but also for our customers, and ways that I think, the technology that's involved here can make our markets more efficient. Again, you talk about the settlement of customers' trades, right? We had a move from, to T2 now to T1, right? So it takes now not 2 days to clear and settle a trade, but 1 day. Now, can we get to same-day settlement, real-time settlement? I think Vlad Tenev, our CEO, has talked a lot about his view that the technology is there.
Yeah, I was about to say, why can't we? I mean, you can send crypto to somebody. I mean, it's not instantaneous, but it's pretty darn quick depending on which crypto you're sending. Like, why can't it happen now?
I'm not sure that the answer to that is it can't. But again, back to the challenge of the regulators keeping up with technological development, the industry in some ways as well, right? I mean, we've been operating on a basis of taking days to clear a trade for many, many years. And now all of a sudden we're talking about real-time or at least even same-day settlement. That's not necessarily an easy ship to move from a cost perspective. And of course, the industry has been doing it this way for a while. The regulators have had a regime that kind of required this for a while. And so I think it can happen. I think it can happen sooner rather than later if we have the will to do it. And that's, really where it comes down to.
I want to circle this back as we close this out. But talk about regulation, which is laws and rules. And this is a legal podcast. And you just mentioned tokenization. And you also talked about education. To those ends, I think education of attorneys is really important about this technology. Going back to tokenization, that changes contractual relationships, right? And I think a lot of attorneys just aren't paying attention to that. They don't know what's coming. What can we do, like people that believe in this technology, that believe that it's a positive change? What can we do to educate our community, the legal community, about this stuff?
Yeah, it's a great question. And I don't think there existed really a large set of crypto lawyers, right? When I was at the firm or at the beginning of my career at the SEC, that's not something that, I was ever aware of, right? Now you're starting to have that, right? You're starting to have legal professionals really specialize in crypto and understand the technology, understand the business and the markets in ways that we just didn't have before. Part of that is just we need time for folks to be involved in this space, right? It's not necessarily a brand new space, but it's not very old. And so, I think part of the development of this is as the businesses mature and legal professionals spend more time on the job, we're going to have a much broader set of legal professionals who are experts in this field. I think you're seeing that in-house. You're seeing it now at law firms, but it's taken some time. And to your point about education, right? I mean, now you're having conferences on legal and policy issues associated with cryptocurrencies and blockchain technology and tokenization in ways that did not exist even 5-10 years ago, right? So there is a lot more focus on this. You see it developing rapidly. You see the talent pool increasing. And I think obviously that's a prerequisite to making this all work. We need experts. We need smart lawyers who are devoting their career to really understanding the technology and the legal issues. And hopefully, and I think, we are well on that road.
Lucas, I appreciate your time. If you want to direct people to learn more about you or Robinhood in general or the education resources, where do you want to send them?
Come check out Robinhood's website. I'm not trying to sign up any accounts or sell any products here, but take a look at the website, take a look at Learn, take a look at Snacks. There's some really, I think, interesting content on there that's actually really enjoyable to read. I try to read Snacks every morning. It's a really cool newsletter. There's a ton of resources out there. More broadly, I think we're at a high point for information on these topics just available to you across the industry, across the web. So lots of places to look, but I think Robinhood's got some really neat content to take a look at.
Okay, that's a wrap for today's episode. As always, we really appreciate you listening. If you want to subscribe, you can find us on most major podcast platforms like Apple, Spotify, Google, Stitcher, etc. Also, if you like us enough, I hope you leave us a favorable review. Thanks again for listening. Until next time, this has been Technically Legal.